I'm on a mission to become financially independent. Most people would probably call this retirement, but I don't want to stop working. I just want full flexibility. My strategy for becoming financially independent is pretty straightforward. Number one, earn as high a wage as possible in my day job. Number two is to save as much as possible into my pension, ISA, general investment account and other savings. And number three is to lower my monthly expenses as much as possible. This three-part series is how I eliminated a big chunk of my monthly spending, which was on my car. And part one of how I got a free car is all about how I benefited from a personal contract plan or PCP. Hi, welcome back to my channel. If you're new here and you haven't taken a second to click that subscribe button, I'd be so grateful if you do so. It's completely free and you will get alerts when I post new videos all around the subject of growth. Personal, career and financial growth. I've previously made a video about the true cost of buying a car, where I compared buying a car with cash, a bank loan, lease and PCP. There's a link in the video description if you'd like to watch that after you've watched this video. 4 years ago, I got my shiny new, top of the range Land Rover Discovery Sport Dynamic Luxe through a PCP plan. Firstly, let me briefly explain the difference between a lease and a PCP. With leasing, you can get a new car every, say, 2 to 4 years, depending on the length of the contract, by paying a set monthly fee. At the end of the contract, you simply hand the car back to the leasing company, take out another model with that same company, or simply walk away. When handing a car back at the end of the lease, you have to make sure that you've not exceeded the annual mileage that you've agreed, and you also have to make sure that the car is in fair condition. You basically have no equity at the end of the car lease. There's usually no option to buy the car. And this is where PCP finance differs from leasing, in that you have more flexibility at the end of the term. You basically have three options. You can either hand the car back to the provider and walk away. You can swap the car for a new one, usually using any equity in the car as deposit for the new PCP plan, or you can buy the car outright, paying what's known as the balloon payment. And if you do this, you own the car outright. Now, there are also other factors to consider on a PCP that wouldn't be the case with the lease, and the key one is the interest rate or APR that you pay on a PCP. Leasing companies don't usually show this APR in the contract because it's essentially covered in your monthly payments. PCP contracts, on the other hand, work a little bit like a loan, so you see exactly what APR you're paying. This is typically between 4 and 8%, although it certainly was before interest rates started rising recently. That usually applies when you're taking out a PCP on a new car. If the PCP is for a used car, the APR you pay can be as high as around 20%. So look out for the APR, the interest that you're paying on a PCP, as well as all of the other relatively hidden costs, such as admin fees and the amount of deposit that you have to pay up front. So with a PCP payment, unlike a lease, there is the deposit that you pay at the start of the agreement and the balloon payment at the end. And of course, you only pay the balloon payment if you want to keep the car at the end of the contract. But even if you have no plans whatsoever to keep the car when you start the contract, you'll still agree that balloon payment up front. And this lump sum or balloon payment is called the guaranteed minimum future value of your car, and it's calculated by the finance company that's arranging your PCP. And this is exactly the situation that I was in 4 years ago when I chose a PCP over a lease, simply because the monthly payments were much lower for a PCP. And this wasn't a particularly rational decision on my part because, as I said, I had no plans whatsoever to pay the balloon payment at the end in order to own the car. But I wanted to minimize my monthly payments as much as possible. So the deal I got was an APR of 7.9% for 48 months, with an upfront deposit of £5,000 and 48 monthly payments of £493.72, which over the course of the 4-year contract came to a grand total of £28,698, with a final payment of £18,413 to own the car outright. So when I signed up for the deal in March 2019, there was no way that I was going to pay almost £19,000 to own the car outright when we got to February 2023, when the contract would end. And this is a lesson in signing up for contracts of 4 years. I regretted the decision to sign up for the PCP a few months in, when I realised that paying the £500 a month, 493, was completely out of alignment with the emerging financial independence goal that I had. I guess this is a lesson in life to future-proof your decisions as much as you possibly can. So I was determined not to make the same mistake again, and thinking forwards to February 2023 when the contract would end, I thought the solution would be to reduce down to a one-car family. But I've realised that as much as I would like it to be true, it's just not feasible for us to rely on one car for all sorts of reasons. Least of all that we live out in the countryside, in Berkshire, 50 miles west of London, where there is no reliable Uber or cheap, affordable taxi service that I can use on occasion. And there are simply too many occasions where I need to use a car and my husband's not around so I can use his. But of course, my real goal was not necessarily to go down to one car. My actual goal was to spend as little money, ideally no money, on a car. So what happened at the end of my PCP in February 2023 to help me achieve the goal of spending zero money on a car? The final balloon payment is very carefully calculated by the finance companies based on the data that they have at the time. What they couldn't have known in March 2019 was that COVID was on its way and the impact that that would subsequently have on the second-hand car market. And so here comes the really surprising part of the PCP deal and the way that it's worked out in the last 4 years. Well, I certainly found it really surprising. As I was coming to the end of the term, I was starting to talk to friends in similar situation, because it's amazing how many people are on a PCP. And they had found that their car was worth way more than the balloon payment. This meant that they were able to sell the car, settle the balloon payment and pocket the difference. This contradicts the advice that I'd given in my previous video, all due to the impact of COVID in the second-hand car market. So I called the original Jaguar Land Rover dealer that I got the car from, and they offered me £24,000 to buy the car from me. That I thought was a pretty good offer. It would mean I would get over £5,500 back. And so I went back to one of the friends in a similar situation, and she recommended that I try Motorway. It's a company that I hadn't heard of previously, although since then I've noticed that they advertise on the Five Nations rugby. And this is when things got really interesting. You'll have to watch part 2 of this series to find out what happened when I sold my car the Motorway way. Thank you so much for watching. I am so grateful for each and every subscriber and for everyone that takes a second to click that like button to help me with the YouTube algorithm. I look forward to seeing you in part 2. Hwyl fawr am y tro.